Good morning, everybody, and welcome to this edition of Think Technical for Wednesday, 28 April. My name is Carl Capilingua, and I'm the market analyst over here at Think Markets Australia. It is a pleasure to be with you as we go through all of the big charts for today. The Think Markets difference before we get started is substantial. $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees. 4 fantastic reasons why you should choose Think Markets for your next ASX share trade. And if you're new to the Think Markets family, we'd love for you to join us. Sign up before June 30 and you'll get your first 5 trades for free. There are terms and conditions, as you would expect with these things. They're generally asked to head to the website for further details. The agenda for today is to look at the big picture charts from all over the world. Then we'll bring it closer to home with a look at how the ASX indices are going. And then I've got for you 33 stocks of interest to look at. As one would expect, with so much to do, we are going to keep the pace of today's presentation very, very quick. So, starting off with bonds, bigger picture, we know that stock markets around the world faltered in February and March due to rising bond yields. Rising bond yields have a direct impact on market interest rates. So what we pay on our mortgages, what businesses pay to borrow, it can crimp business profits, it can crimp our ability to spend, which can crimp business profits. Further, it also reduces stock valuations as well through a higher discount rate, which impacts your future cash flows. So major ructions in the market. Where are we now? Things have settled down considerably. These are the Australian bonds on screen. You can see we hit a peak of 1.973%. We came down to about 1.62 and we're towards the bottom end of that range. In the US, we saw a similar sort of move, a sharp move that is. We hit 1.76, pulled back to 1.52, and we're towards the bottom end of that range. What do we want to see from here? Well, we certainly don't want to see bond yields come down too far. And you might think, well, hey, yields went up, markets faltered. Don't we want yields to go back down again? Well, we actually don't, because bond yields move inversely to bond prices. So if yields come back down on the US 10 years to, say, 1.2%, would mean bond prices are rallying. Bonds are a flight to safety instrument. If you're buying bonds and bond prices are going up, it's because you're worried about the world economy. We don't want to see that. We want to see confidence in the world economy. That's good for stocks. By the same token, we don't want to see this rocketing higher either, for all of the reasons I discussed earlier on in the session. So where they are right now is the Goldilocks scenario. Not too hot, not too cold, just right. What else have we got here in our bigger picture charts to look at? We'll have a quick look at crude oil, and we do need to zoom in a little here because of the negative print there throwing my charts out of whack. We can see that crude oil is still in a short-term uptrend. It is still in a long-term uptrend, so very constructive here. A nice low, I think, put in at 57.25, confirmed here with this low at 57.63, and I think further confirmed here at 60.61, holding above the round number. I think it all looks pretty constructive for crude, and I think the last couple of candles here are looking pretty good also. Also on the list here, we've got some iron ore charts. So this is the Singapore-based US dollar price. We can see it has moved through to recent highs. I won't say all-time highs, because if we zoom out far enough, we can see, I think if we go, that's all the data I have. It only goes back to 2011. We did see a move a little bit higher than that previously on this contract. I think it's about 192, I'm going to say off the top of my head. So look, it's still very, very good. Might not be all-time highs, but it's very, very close to that. Trends are clearly up, and there's nothing sinister at all to suggest that that's going to change anytime soon, and that would obviously have an impact back here for our iron ore stocks like BHP, Rio, and Fortescue. That's the Shanghai iron ore price. We can see that's broken to new recent highs. I think it might even be all-time highs here on this one, but happy to stand corrected if you're shouting at your computer screen right now. But nonetheless, the outlook for iron ore from a technical perspective looks very, very good. Let's head over and look at some cryptos. We've got Bitcoin here. The most prominent thing I think on the chart is that this big dip. There was some news out that Tesla was taking some profits on their Bitcoin position. Ironically, it was the Tesla move that kind of punched it up. Might have been here through February. It may have been a little later. And ironically, even more ironically, it was the news that whilst they had sold 10% of their crypto holdings, Tesla, they were going to hold on to the other 90%, which caused it to bounce. So some weird things going on in the Bitcoin market. Let's put the fundamentals aside, focus on the technicals. The short-term trend is down now for Bitcoin, and I haven't been able to say that. This is very interesting. Let's go back and see the last time the trend was down. It's going to be around here. So October 2020, before that big run up, before my call around about here, I think it was, that it was going to go much, much higher. That was the last time we saw a short-term downtrend on my charts on Bitcoin. So that is very interesting. Let's obviously now take a little bit of a more cautious approach with our Bitcoin holdings, reflect that in the short term, supply has increased to the point where it is overwhelming demand. Certainly the long-term picture is still very much demand-centric, and it is up, and I would be happy if you're a longer-term holder to back Bitcoin, but maybe your shorter-term trading positions need to be far more conservative, I think, certainly if you're looking to go long. We are interacting with that short-term downtrend zone right now. We know that these areas, these short-term trends and long-term trends defined by the moving averages can act as static support and resistance. And you can see many occasions here where we've had static support, and now we're getting potentially static resistance here. And we're kind of compressing between this zone, between the static support of the long-term uptrend and the static resistance of the short-term downtrend. Let's get to the point here, Carl. Short-term traders, I think you can be out of the market. Even longer-term traders, you probably still hold at this stage. The bounce off 47,000 is impressive. These two candles, the shadows, in fact, the double hold here with this black candle, but the nice lower shadow, very, very impressive. Don't count Bitcoin out at this stage, but a more cautious approach if you are a shorter-term trader. Now, contrasting that is Ethereum, which is going gangbusters at the moment. Looks absolutely fantastic. I can't fault this one. It's a stairway to heaven. Bottom left, top right. The candles are amazing. These lower shadows through here at 2200 just speak to the amount of latent demand in the system. So happy to be short-term long and long-term long on Ethereum at the moment. And a very interesting chart here is the Bitcoin divided by Ethereum price. And what we're seeing here is investors' preference between the two. So when and I'll go to a weekly chart here because it's easier to see rather than just a bunch of dots. When this price is rising, it means Bitcoin is outperforming Ethereum, and that was definitely the case until about the beginning of 2020. And since then, we've seen this sort of general ebb and flow where Ethereum has been outperforming Bitcoin, and it's really accelerated over the last 1, 2, 3, 4, 5 weeks, and certainly is moving to a point that we haven't seen for at least a couple of years. So Bitcoin cautious, Ethereum still all systems go there. Okay, quick change of the database, and we're now looking at the world indices. We've got the NASDAQ composite on a screen, short-term trend up, long-term trend up. Candles look pretty constructive. There are a few little black ones in here that, I think you want to keep an eye on. Not surprising to find a little bit of supply last night at the all-time high there at 14,176. Look, as long as 13,621 holds, I think the short-term trend will continue to play out, albeit with maybe a couple of candles to get through the resistance, the natural resistance you would expect at the all-time high. Heading into the S&P 500, this one tracking much better than the NASDAQ. NASDAQ was one of the casualties of that move up in interest rates and that switch between value and growth. S&P 500, gangbusters at the moment. I can't really fault it. The candles are great. The trends are great. I think we can expect higher prices there also. Let's head over to the Russell 2000. Looks a little bit more like the NASDAQ, but otherwise I think still very well supported, building a nice base pattern here. And if we see a move through that high there at 2360, the US market will be onwards and upwards from here, continuing that charge. Let's have a quick little look around the world. And I know I haven't updated some of these lines, but that's okay. We'll get the general picture. Shanghai Composite has taken a bit of a beating here. That was the Chinese government taking some steps to curb some of the economic growth over there. It sounds crazy, but they didn't want to see the economy overheated, and the share market has responded accordingly. Doesn't look fantastic, not a market I would be focusing right now. Let's head over to Europe. The DAX looks very, very strong. You would certainly be happy to look at stocks in the DAX. I don't have any for you, but that's your homework to complete at another time. Nikkei looking quite flat. Asia has taken a bit of a pullback on the rising interest rates and hasn't recovered. And let's do one more. Let's head over to the US dollar index. We can see US dollar generally weakening against the other major currencies, and we're seeing this fantastic depiction here of this long-term downtrend acting as a dynamic resistance zone. We can see here that much like the Bitcoin, sort of inverse to Bitcoin, where the short-term trend changed, provided dynamic short-term support, but once we broke through that, we're back in this longer-term trend. So it'd be interesting to see if Bitcoin can do the reverse, that is break back above its short-term downtrend, find some support at it, and then move high in line with its longer-term uptrend. Looking a little bit too far into the future, I think. Let's have a look at the volatility index. We want to see this generally trending lower. That means that investors are feeling more calm about the current global economic environment, about investing in stocks. The best bits of the bull market over the last 20 years occurred when this thing was 15 and below, typically around 10, so there's a long way to go there. I would suggest if we were at 10 on the VIX, the S&P 500 would be trading with a 5 in front of it. Okay, let's bring it closer to home. Have a look at the Aussie market. Still very strong, as you can see, with the short-term uptrend, long-term uptrend. We did break through that pesky 69.40 level. Took us so long to get through it. That area does now act as a support level, a static support level, and we do have dynamic support coming in through sort of that 6900 to 6950 level. We can see on Wednesday last week how important those static and dynamic levels are and how they work together to force prices higher. We're having a little bit of a reaction at the 7095. I'm happy to continue to look to the long side on the Australian market, given that broader technical picture. Let's have a quick whiz through the sectors here. Consumer discretionary pulling back to its dynamic support zone. There were some negative reports out there. I'm thinking of one from Redbubble. I'm thinking about one from Kogan. That's caused this sector to take a little bit of a breather. Overall trends still strong. Contrasting that, you've seen great moves to the upside in Accent, for example. Moving along, energy, I think, is disconnected to the crude price, which I think looks very good. It doesn't mean the stocks in that sector are looking cheap at the moment from a technical perspective, because some of those short-term trends have turned down again. I'm talking Santos and Woodside. Financials look very strong. I've got a couple of stocks to talk about today in stocks of interest. Gold looks very good. Off the top of my head, I don't think I have any got major gold producers in there, but certainly look at Ramelius would be my pick in that sector. West Gold and Gold Road also look pretty good. Healthcare, look, stuck in the middle, not interested in that one. Information technology, a big pullback in Afterpay, it's driving that pullback there. Look, a sector that is looking interesting, but looking at that technical picture, a little bit concerning for me, given we appear to be now making a very strong double top with a lower top pattern. We will have to see what happens at that dynamic long-term support zone. Having a look at the material sector, this is the pick of my sectors right now. You can see it's breaking to new highs. The candles look fantastic. You can see it's actually very similar to the ASX 200 there. So it is driving the index forward, and I would definitely be looking for opportunities within that sector. We talked about strong iron ore prices earlier on. The REITs, there are some interesting REITs out there, but not a sector I'm particularly focused on. Staples looks about as boring as you would expect Staples to be. Telecommunications, that's the Telstra index. Telstra looks pretty good, but not a lot going on outside of that. Utilities are still absolutely woeful. The Aussie Volatility Index trending lower, which is nice to see. Having a look at some of the key commodities here. Aluminium trending up, copper trending up, iron ore we've talked about, nickel a bit flat there. We've talked about nickel prices in the past. I won't go into it too much here simply because of time, but we don't want to see that break below sort of 16 again, because it would be bad for nickel prices and nickel stocks. Lead looking pretty good. Tin still pretty strong. Uranium, if you're interested. We've talked about crude oil. Thermal coal hanging above or hanging towards its recent highs. And zinc pretty strong there. Actually looks like it could break out. Zinc. Australian dollar pretty flat, stuck in the middle. Silver, same again. And the gold price is looking constructive for a potential swing low, but we need to see it above 1800 with a vengeance pretty quickly, I'd suggest. Okay, let's head over to our stocks of interest today. I'm heading over to my shortlist here and how to read what you're seeing on screen. We've got the most recent resistance level and the most recent support level. If you like to use stop losses, you might want to If you go long, that is, set your stops below the support level. If you're looking to buy, you might want to wait till a break of the resistance level if you're more conservative, or I'll give you another entry point if you want to be more aggressive. This one really could be turned to green right now because we're trading above the old resistance and it should act as support going forward. This is American Pacific Borates. It's one we have covered in the past before. I covered it last year sometime anyway, around about 60 cents. It's doing very well. It certainly would stick with it. If you listened to me on Ausbiz earlier, late last week, you might have been a buyer. I would definitely hang on to that one. In fact, I talked about it on Monday, didn't I? And I talked about it in the weekly Think Tank also on Monday. So definitely a hold there, or looking to buy the pullback into the old resistance zone if you're not on it. Anytime you see a stock in this list that's less than 10 cents, use some common sense. It's a more speculative type of stock. It's not BHP, is it? It's not Commonwealth Bank. So it should only ever have a very, very small part of your portfolio, and it should be risk money that you can afford to lose. Having disclaimed the hell out of that, this one looks pretty good, I think. Anax metals, don't ask me what they do. I wouldn't have a clue. This is ThinkTechnical, not Think Fundamentals. I'm showing you some very interesting charts here, and that's the way you should look at this presentation. These are interesting charts. They aren't recommendations. They're just bringing great-looking charts to your attention, and you decide what you want to do from there. But we do have a very nice short-term uptrend here. We have a nice long-term uptrend. We have some nice candles, and we're potentially breaking out through that 8.6 resistance zone. ANZ, well, you look at this and you go, well, this could be a cornerstone holding in my portfolio. Much different. And I like this one. It's one we've had in this ThinkTechnical before. It looks like it's holding its short-term dynamic trend zone and potentially going higher. I know we've got a dividend coming up on that one in May, if you're interested in that kind of thing. Antipodes, this is a fund here, a global fund. They invest in a variety of different stocks. Again, go do your own research. But if you're into something a bit more stable, that gives you a diversified portfolio by just buying one thing. Check out the yield, etc. But looking, I think, pretty constructive here. But it's going to be a slow and steady approach, much like ANZ. But anyway, looking pretty good at this level. Happy to buy around here, or if you're more conservative, through 112. This is Australian Vintage Group's a stock we talked about many times in ThinkTechnical. It's looking still quite constructive. We'd be happy to buy around the current levels, or if you're more conservative, above 76 cents. Brickworks. This is also one we have covered in ThinkTechnical. And I've just noticed I'm still super zoomed in because of the crude oil charts. I'm just going to go zoom normal here, and we'll get a better view of what's going on. So very quickly, just having a look at this bigger picture on ABR, and no more words required. ANX, ANZ, and incidentally, any markings down here is just the last time we covered it in ThinkTechnical. And if there's no marking, this is the first time we've covered it. ABG. And over to Brickworks. Apologies for that. Looking very constructive. And, you do need to zoom out sometimes and see where you are in the big picture. That was the all-time high. So we have broken above that. I think we're still dealing with it. That's why I've left that line red and not green. But I do think also we've got plenty of strong demand down here at this $20 level. Looking at that low, that candle, that candle, but even those two candles with the lower shadows and that candle there. I think there's plenty of demand here, and happy to be a buyer around these levels if you're in it from earlier on. Happy to hold it. Boral is also one we've covered a couple of times in the past. Same sort of story as Brickworks. It's in a very similar sector, the same sector really, isn't it? And happy to hold it. The trends look fantastic. No reason to get out at this stage. Beacon Lighting Group, new entrant to the list. Happy to be a buyer around here. Strong short-term uptrend, strong long-term uptrend. I like the candles. I think there's lots of little white candles here, lots of little lower shadows, and holding the dynamic support zone. Bank of Queensland in the obviously the similar boat to ANZ. Don't quote me on when the dividend's coming up, but I do know they reported their first half results a week and a half ago, so I'd say it's very, very soon. The trends are fantastic. The candles are looking good, and happy for that to remain in your portfolio, or if you don't have it, to add it at current levels. Capital Health, this is a new entrant to the list. It's a small diagnostic imaging company. So it is a real business. It's got cash flows, profits, go check out the fundamentals. But the technicals look very good. I like the candles. I like the price action, high peaks, high troughs. I like the support from the short-term moving averages, which indicate both short and long-term trends, and happy to be a buyer around here. If you're more conservative, you might want to wait for a break through 40. Collins Food is what we've covered a few times before. It's worth sticking with. If you've got it, it's worth buying. If you don't, I think it looks very good right now. CSR in that building sector with Boral and Brickworks. This is my pick out of the three, actually. I think this is a straight out buy. Looking to the next one, back into the speculative bucket. So again, common sense required. Looks very good though. I like the trends. I like the candles. I like the price action. Happy to buy at current levels. That is Emyria, I think is the way you would pronounce it. Emyria Limited. The next one is Emerald. And of course, we're looking here, everyone. If you don't know what the hell it is I'm talking about, here are the codes and here are the names. This one is Emerald Resources, straight out buy. I'm a little bit sad on this one because I wish I'd done a ThinkTechnical a few days ago, because I would have covered it probably on that candle there. That's perfect. But look, I hate to buy after the breakouts, but it just looks so good. But I'll let you use your common sense on that one. Emerald Resources. EXP, maybe this one's before the breakout. So Experience Co. Yeah, look, I don't mind buying here. You might want to play it on the conservative side though and wait for a break of 29. This one is an ETF. I always like putting ETFs in here because much like that earlier one, Antipodes, which is a fund, this is a similar idea where you're getting exposure to lots of stocks with the single purchase. So this is the Global Emerging Markets Fund. And treat it more like a blue chip position rather than a speculative position, but I think it looks very good here. Happy to buy at the current levels. Fortescue, we talked about the iron ore prices. I have been in media for the last month or so, really, calling a buy on this ever since it bounced out of this range, held the range and started to rally again. But happy to hold it if you've got it from prior recommendations. I'm still a buyer here, I think, even at these levels. The yield is about 14% and the PE for FY21 is under 6. And as long as iron ore prices stay up, well, I should say the longer they stay up, the more the brokers have to upgrade that stock. So this one is Global Data Center GDC. I think it looks very, very interesting. A nice base pattern. I like the fact it basically broke down and then rallied through here. That's usually catches a lot of people off guard. I'm happy to buy it at current levels. If you're more conservative, wait for a break of 192.5. Galan Lithium, I hate buying things so far away from the short-term dynamic trend zone. I'd much rather get it here. But hey, we're not here or there, so we're here. I still think it looks very good. If you're not on it, you might want to take a small risk money position on it. GED Holdings, more of a blue chip stock, great base pattern, and it's put in some really great candles. Look at all these white candles in here. It tells you that if the market opens down for whatever reason and GED follows initially, by the end of the day, it's trading higher. I think that looks really good. Happy to go at current levels, or if you're more conservative, a break of 1366. This one is GWR Group. I like the fact it's come back to this long-term support zone. I like the fact it's held it twice. I like the fact that we've come in here, a little bit more volume on this push-up, taking out some of the supply, and then continuing higher from there. Very important. I'm happy to buy it at current levels. Iluka, bit more of a blue chip one, isn't it? Happy to continue to hold it if you're in from November last year. I'm happy to buy it around current levels if you're not. Imdex, it looks in the material sector. It's one of those stocks, as we often say, selling shovels to the miners. So they're not doing the mining themselves, but they have some fantastic software that helps miners do what they do. I think it looks fantastic. Happy to buy at current levels. Ioupay. We actually covered this in November last year before the big run-up, maybe here or here. October, around here somewhere. I haven't covered it since. I think it's starting to look very interesting again. Again, this is risk money. Happy to buy at current levels. Metals X, I'd wait for a breakout of 25 on that one. Money 3, just happy to hold this one. We've covered it a couple of times before. MVF, happy to be a buy here. First time we've covered it. Happy to be a buy here. I think it's quite constructive. Short-term uptrend, long-term uptrend's just beginning, so it's a bit more of a turnaround play. And we haven't discussed this specifically, but there are two types of charts here. One that's more of a turnaround play. So we've moved through this long-term downtrend zone. It's gone from being dynamic resistance, very clear here, dynamic resistance, to dynamic support. That's how we know we've turned the corner. High peaks, higher troughs, base patterns, breakouts. And then happy to buy pullbacks to support like 84 cents. But I think with the candles in here, happy to go in the current range. The opposite one is, I'm trying to think back, CSR, which is a continuation setup. So it's bottom left, top right. So they're the two main types of setups. PFP is a bit more of a turnaround play. We can see it's gone from a long-term downtrend where we've had dynamic resistance to dynamic support, nice base pattern, nice candles, breaking potentially out of this base pattern here to move higher, probably back up to 380. Happy to buy at current levels. Perpetual, again, more of a turnaround play. It's more of a longer term, I think, blue chip holding, but happy to go at current levels on that one. QRE, if you can't decide which mining services, building stocks, they're all in there. We've talked about Boral, we've talked about CSR, we've talked about Brickworks, we've talked about Imdex, we've talked about Fortescue, and a bunch of other small miners there. They're all part of this broad church that is the materials sector. So if you just want to get them all in one go, that's how you do it, QRE. Resmed, happy to buy at current levels, holding this long-term uptrend zone, moving back into the long-term uptrend zone with great candles, great price action, and I think happy to just go out and buy that one, a bit more of a portfolio holding. Rex Minerals, one we've covered a couple of times before, doing very nicely, happy to be a holder if you're still on it, happy to be a buyer if you're not, and finishing off the list with Vulcan, and this is a fascinating one. I had some markings down here somewhere at 80 cents, but then I checked my spreadsheet for ThinkTechnical and it wasn't in there. So it means on a particular day, I marked it up. I was about to put it in at 82 cents. And then for whatever reason, by the end of the day, I didn't run it. And then I haven't looked at it since. And here it is now at $7.84. So better late than never. Short-term uptrend has resumed to the upside. The long-term uptrend is spectacular. I have no idea what happened here. You'd have to go check it out. I do know this is a lithium stock, and price action's back to higher peaks and higher troughs, and the candles are white. So happy to get on board that one. Okay, deep breath. We're out of time, and I think we've covered a fair bit of ground. Hopefully you'd agree that there are some very, very interesting charts out there for you to look at. Let's head back to the slides and finish off the session. Thanks for joining me today. You can catch all of our other market news, views, opinions and updates in our market news section of the website. You can follow me or the Think Market handles on Twitter if you like. And in terms of upcoming events, I've got one today, in fact, at 12 o'clock Sydney time. Now I've babbled on for about half an hour about all the stocks I'm interested in Ask the Experts. You get to bring the stocks that you're interested in to the table, and I'll give you a quick technical and fundamental on those. You do need to register though, so head to the webinars section of the website to do so. And then next week we'll have our fundamental analysis refresher. Why are we talking about that? Think Technical. And then a couple of weeks after that we'll have our top ASX stocks under 30 cents, and we've probably seen a few that could qualify in today's presentation. The disclaimer before I leave you, and yes, I'm going to say it again, hey, these are great trading ideas. I think we've seen some fantastic charts, but it is really up to you to decide what you do next. Everything we've talked about today is general advice. We do also have some products that could see you lose more than your deposits, so please read this disclaimer carefully, and if you have any questions at all, give us a call. Apart from that, it's been a pleasure chatting with you this morning. All the best for your trading. Until we catch up again. Bye-bye for now.